Joining us right now to talk about where oil prices may be headed and the IEA's warning is Amrita Sen. She's the head of research at Energy Aspects. And Amrita, let's walk through this. We're talking about 4 weeks in a row of gains, but even at 82.15, that has to be the market pricing in some sort of demand destruction later this year, because otherwise, between that and OPEC's surprise cut, you'd probably be looking at prices even higher.
Oh, absolutely. I think you've hit the nail on the head over here, right? Because with the OPEC cuts, we are looking at an incredibly tight market, especially in the second half of the year. But that depends on the global economy doing okay. And by that, I mean it's a mild recession, which we are already accounting for. We do have OECD demand down year on year quite substantially in our numbers, China growing, non-OECD growing, right? But there's so much uncertainty, especially what we've seen with the banking crisis, that is just keeping people from going long right now, because you just don't know how big potentially the recession could be. And in some ways, people are also worried that if oil prices go up too quickly, too soon, would then force the Fed to raise interest rates again and then cause a hard landing. Now, oil is obviously not the only driver of inflation, but that's a separate story. I think that's what's playing on people's minds right now.
So the IEA, the International Energy Agency, warning that global demand is going to hit a record high this year. Do they know more than we do, or what do you make of that forecast?
I mean, we've had that number, right? I mean, since what happened was obviously 2020, because of COVID, we came off in demand. But since then, the recovery has been, we pretty much were back above 2019 levels in most products last year. And this year, with China's reopening, absolutely, we will be hitting a record high. And I think this goes to the crux of the problem we face in more of the medium-term story for oil. Oil demand has been hitting record highs pretty much every single year, barring COVID. And we just aren't investing enough in supplies. And this uncertainty right now in the market is actually even worse for the supply side, because which CEO is actually going to take on the mantle of investing and saying, oh, yeah, we are going to put more money, especially when you just don't know what the economic outlook is going to look like.
That's a really good point. We kind of thought there were a lot of good reasons for people to invest, but you're right. Uncertainty, not knowing what's going to happen to the global demand picture, probably has those CEOs being a little more cautious rather than not, which even if they were to start investing right now, how many years would it take before you could kind of catch up to demand?
I mean, look, Saudi Aramco, one of the best companies out there, even they take anywhere between 6 and 7 years from real inception to bringing the projects online. I mean, most of their big projects are coming online 2026, 2027. And this is something, Prince Abdulaziz has been talking about very openly, saying it's not a light switch. It takes a long time for investment to come through. And shale, which is quick cycle, that's completely changed now with the focus on shareholder returns and also rising costs. And again, shale worked in a zero interest rate environment very differently from a 5% interest rate environment. So if you take shale out of the picture, of course, shale is going to grow, but not like millions of barrels per day. Then your lead time for onshore, offshore, you're talking about years over here. So even if you did take the decision today, you won't get the oil over the next few years for sure.
So with all these uncertainties, what's your longer term outlook for oil? Let's just say over the next year.
I'd say this quarter, I have very little conviction. I really think prices will be range bound. You're going to see a lot of volatility, potentially even more downside given the macro environment. But second half of the year, if we have a bit more stability in the macro, then expecting well above $100, because the OPEC cuts will tighten the market severely. And the same into 2024. Of course, again, the big caveat is the economy. But for now, yes, it's going to be a recession, a mild recession. As long as the bottom doesn't fall out, we're pretty confident of the second half outlook. It's just this quarter, I think, is going to be choppy with all these kind of noise and macro flows that you're seeing.